Welcome to this podcast by the Central Bank of Kuwait, where we aim to shed light on economic views and enhance awareness over key economic concepts and developments that stand to affect the lives of individuals and societies. I am Dalal Mullah from the Communications Department at the Central Bank of Kuwait. The Law Number 106 of year 2013 sets legislative framework for all the efforts of anti-money laundering and combating the financing of terrorism in the state of Kuwait. These crimes are financial crimes that harm individuals, societies, and even countries. Here with us today to discuss this topic is Jarrah Al-Ruwayih from Central Bank of Kuwait. Now, before we dive in, would you just give us a simple definition of what money laundering is?
Hello Dalal, thank you for having me. Simply put, money laundering is a process that aims to hide the source of money that comes from illegal activities. Money laundering is committed through complex transactions, sometimes crossing borders. For example, the crime could be committed in one country, and the money would be transferred to other countries to distance the money from the original crime. Sometimes, though, the original crime, let's say bribery or sale of contraband, as well as the laundering of the money, could happen within the same country. In all cases, these crimes use very complex methods, rely on experts in finance, and make use of financial tools and instruments, and so on and so forth.
In local as well as international law and instructions by regulators, we notice that there can be a connection between money laundering and the financing of terrorism. Can you touch on that, please?
Absolutely. The definition of the financing of terrorism is collecting money with the intention of using it to commit an act of terrorism. While money laundering is done to be able to use money generated through a crime with hiding the criminal's connection to the crime, financing terrorism is where money is provided to commit a crime while hiding the financer's connection to the crime. In both cases, there is an intentional crime and concealing the source of the money, whether they are used to commit a crime or generated from the crime after the fact. World Bank reports actually indicate that the method used in both scenarios are very similar.
Okay, so you mentioned that this is a global phenomenon of great magnitude. Are there any specific estimates in this regard?
Crimes of money laundering, by nature and definition, are not carried out in the open. It is very hard, therefore, to get an accurate estimate and statistics. However, on a global level, the International Monetary Fund (IMF) estimates that the total volume of funds that go through money laundering stand between 2% and 5% of the world's gross domestic product.
That's very insightful. Now, we would like to shed light on what are the effects of crimes of money laundering on the economy.
Money laundering affects the security of a country, as there is now money available to commit other crimes. The prevalence of money laundering also has negative effect on an economy's productivity and competitiveness. In many cases, the people laundering money will establish quote-unquote shell companies that serve as legal front for their actions. These companies are neither productivity nor profit oriented. They therefore accept very low prices for the products and services they provide, which makes real production-based companies unable to compete. Money laundering also harms a country's financial reputation. International financial institutions are restricted from dealing with their counterparts in said countries, which leads to limited financial services, higher costs, delays in transactions and executions, etc. The ability of that country to secure foreign investment is also affected badly if its financial reputation is tarnished. This would, in turn, affect companies as well as individuals, and these are just few examples of the negative effects of these crimes.
Specifically speaking, how is money laundering and financing of terrorism being countered in the state of Kuwait?
As you know, Dalal, these financial crimes involve complicated transactions and ever-changing methods. Countering them, therefore, requires the cooperation of many parties on the local and international level. In Kuwait, Law Number 106 of 2013 concerning anti-money laundering and combating the financing of terrorism represent the main element of the counter-effort system. The law defined the relevant authorities in Kuwait that are tasked with the anti-money laundering and combating the financing of terrorism efforts. These including regulators such as Central Bank of Kuwait, the Kuwaiti Financial Intelligence Unit (FIU), the General Customs Department, and the Interior Ministry. The law established the KWFIU as an independent legal entity and indicated its four main tasks as follows. 1. Receiving suspicious transaction reports. 2. Requesting information, either from the party representing the report, from other concerned parties, or from financial intelligence units in other countries. 3. Analyzing incoming data and information. 4. Where the KWFIU concludes there reasonable evidence of money laundering, reporting and referring cases to the public prosecution.
You mentioned that notices and reports are being presented to the Kuwait Financial Intelligence Unit, also known as the KWFIU. Who presents these reports?
You have to keep in mind, Dalal, that the law obliges financial institutions such as banks and exchange companies, as well as defined group of other industries including real estate agents and gold and precious stone stores, among others, to file suspicious transactions report to KWFIU directly and without delay of any transaction or attempt transaction if it finds reasonable evidence to suspect that it involves money coming from or connected to a crime, or money that could be used in money laundering or financing of terrorism. These units present these reports to KWFIU without referral to any regulator they are normally subject to, whether the Ministry of Commerce and Industry, the Central Bank, or the Capital Markets Authority.
You have used the phrase reasonable evidence to suspect an illegal transaction more than once. Would you elaborate on that, please?
This is an important question. A lot of people think that simply depositing great sums of money into an account is sufficient evidence of a money laundering transaction. However, if the customer declares legitimate source for the money, such as sale of real estate or stocks, this would remove suspicion. Meanwhile, there are a lot of cases where the money reaches banks at an advanced stage of the money laundering process and therefore appears to be clean. That's why verifying the source of the money requires attention and compliance with regulatory standards and controls.
So what is the role of regulators in this case?
Regulators such as the CBK, the Capital Markets Authority, the Ministry of Commerce and Industry, and other entities indicated by law have a duty to verify that the unit they regulate comply with all the legal requirements and to issue circulars and instructions including the requirements of anti-money laundering and combating the financing of terrorism. In case of any violations of the law or instructions set up by regulators, regulators are authorized by law to enforce gradual penalties including a written notice, fines up to 500,000 KD per violations, and their license revoked.
As mentioned in an earlier answer, there are several specific regulators concerned with enforcing the law. Can you let us know how the rules and efforts of all these regulators are integrated and harmonized?
The National Committee for Anti-Money Laundering and Combating the Financing of Terrorism was established for that purpose. The committee is headed by the chairman of the KWFIU and with the membership from concerned authorities, including the CBK. Among the mandates of the committee is to develop the national strategy to counter money laundering and financing of terrorism and follow its implementations and coordination with all relevant authorities.
These methods used in money laundering and financing of terrorism keep evolving. So how do financial institutions keep up?
It is important to make maximum use of the latest technology. Therefore, CBK's instructions requires banks, exchange companies, and financing companies to set in place technical system to track transactions and trigger alerts wherever a case requires further verification. Of course, specialized staff play an essential role. The CBK is continuously strengthening the capacity among staff of all regulated units through regular training held in cooperation with the KWFIU. CBK's instructions issued to all supervised units also requires the continuous technical training programs must be provided on anti-money laundering and combating the financing of terrorism within a specific plan.
You covered the role of banks, as well as Kuwait Financial Intelligence Unit and the Central Bank of Kuwait very sufficiently. But what about individuals? What part do they play?
This is a critical issue. Awareness among the public can reduce the prevalence of money laundering crimes and protect them from falling victim to fraud connected to such crimes. And because those who deal in money laundering are aware of the strict penalties the law has stated, they very frequently abuse members of the public's lack of knowledge and their good intentions and use their accounts or execute transactions under the unsuspected victim's name. If the transactions are detected and identified as illegal, the legal consequences would fall on the victims rather than the true criminal. And this is why we always urge people to be alert, to be wary of financial bait, to never share confidential bank account information, and to never accept any sum of money from a party within whom they have no business relationship. To spread awareness on this and other topics, the CBK launched Diraya, or Let's Be Aware, campaign in cooperation with Kuwaiti Banking Association. The campaign, currently in its third year, disseminates a variety of media on protection and precaution against fraud involving money laundering and cyber fraud.
Many thanks to Jarrah for joining us today. This brings us to the end of our podcast. Thanks for listening.